Education bonds are a savings and investment vehicle for clients to be able to.
I know obviously a lot of people might understand the first two aspects, but regarding the estate planning vehicle, that's obviously where a lot of people are misguided in that area.
We've seen a resurgence in the use of bonds for these estate planning benefits because it gives clients that peace of mind and certainty that upon the bond owner's passing, the bond can be paid out to their beneficiaries.
Welcome to another episode of Founders of Finance, where every episode we dig deep into the insights that shape financial success in Australia, with the real conversations with business owners, investment experts, professionals, and everything in between to bring you real world stories and insider insights to understand the finance world today. Whether you're a small business owner, an inspiring investor, or simply looking to strengthen your financial foundations, there's something here for you. I'm your host, Ross Pocock, co-founder of Sternlight Financial, and today Dani Dy joins me from Futurity Investment Group. She is an expert when it comes to education bonds with over 10 years experience working within financial services and has recently been nominated as a finalist for BDM of the Year in Women's Wealth Awards. So congratulations, Dani, and welcome. How are you today?
Thank you so much, and thank you so much for having me. Really appreciate jumping on today.
No problem. Thank you for joining me. And obviously, I've got to talk about the nomination for BDM of the Year. That's very exciting. So, when do you find out if you're a winner?
Yeah, it was definitely unexpected. But we find out next month at the Women in Wealth Awards in Sydney next month towards the end of the month. So yeah, really surprised with the nomination, but really grateful because it is always a focus of mine to be connected in the network and add value to my clients. So I'm really glad that to have that recognition.
Yeah, definitely. Now, anyone that you said might be a surprise, but anyone that has worked with you or seen your work, I'm sure it's not a surprise to them. But today, obviously, we're here to talk about kind of education bonds and how they work in Australia. So, obviously, you being the expert, I'll let you explain what an education bond is and kind of the purpose.
Yeah, no problem. Well, I mean, education bonds are a savings and investment vehicle for clients to be able to accumulate and grow their wealth that they can use for various life events, but will be particularly advantageous when they do use it for education. Now, when I am talking about it to people outside the industry, like my husband, and explaining what it is, I normally like to position it as a pretty much like a combination of three different things that they would be familiar with. So firstly is it's a combination of a similar structure to super, being a tax paid environment. In super, it's tax paid at 15%. In bonds, it's 30. Managed funds, so the underlying investment structure within bonds are managed funds. And then lastly, a combination of it being a life insurance product, providing those estate planning benefits to clients as well as asset protection. So it's essentially a combination of those three,
Yeah.
and that is essentially what an education bond is.
Yeah, perfect. Now, I know obviously a lot of people might understand the first two aspects, but regarding the estate planning vehicle, that's obviously where a lot of people probably um, are misguided in that area. So, are you able to elaborate a little bit on the estate planning benefits of that?
Yeah, of course. So with education bonds, they sit under the Life and the Bankruptcy Act and are considered a life insurance product. So with that, they can actually sit outside the will and they cannot be contested. So we've seen a resurgence in the use of bonds for these estate planning benefits because it gives clients that peace of mind and certainty that upon the bond owner's passing, the bond can be paid out to their beneficiaries without much stress. It's paid out effectively and quite quickly because, again, you can look at it as a life insurance policy. So once we receive notification of death, we will normally can pay the bond out.
Yeah, perfect. And that's great. I think the big thing there is not contested because obviously so often wills can be contested. Once money's involved, it can be very complex for clients. Now, obviously the nature of these are for education there. So you guys recently released an education research on the cost of education in Australia.
Yeah, yeah, we did.
Yeah.
Yeah. So it's something that we've done over the last couple of years. We at the start of the year, we've released a cost of education report where we've gone out and surveyed families on the total cost of education, and we've produced that in and being able to provide averages for on a national level and also on a state by state level. So it's really interesting to look at those figures because we break it down from a government education pathway, a Catholic pathway, and then an independent, and what those average costs are. So in Queensland or Brisbane specifically, for a government schooling pathway from prep to year 12, a 13-year journey, you're looking at $100,000 for someone entering primary school today, which is a far cry from, that conception that, government schooling or public schooling is free.
I was
Um,
shocked when I read that, having just had a little girl myself. I saw those numbers and I was like, that's far higher than I realized.
Yeah, and it's all the things that you might not necessarily think about because often when people think of schooling, they're just thinking about school fees. But realistically, it's uniforms, it's textbooks, it's laptops with the rise of technology in schooling, it's school camps that can be a significant expense as well, or if they're doing music and their music instruments or tuition. So it's anything that you could reasonably imagine associated with that education journey. We've factored that in. And so, yeah, with government schooling, you're looking at about 100 grand. For Catholic, the average was 200. And then for your independent schooling, the average was about $370,000. And that's purely just one student, or one child going through that pathway.
And if you look at a family with two kids, you're kind of doubling that, unless there's hand-me-downs, which might reduce it a little bit. So, if the families are looking at these education bonds, how do they differ from a normal investment that they might hold in their personal one?
Yeah, so I mean, there's so many different vehicles out there that a client can look to invest in, whether they hold it personally or they hold it through other structures like a trust or a company, etc. Where we do feel that the appeal in an education bond, firstly, is the tax paid nature of the structure in itself, in the fact that it is internally taxed. So there's no personal tax consequence for the client, or there's no personal tax reporting that they're having to do on an ongoing basis. It can truly be for those clients an opportunity for them to do a regular contribution into their bond that they can kind of set and forget, but look to access when they need it. And then the other aspect to it is, in terms of access. So with education bonds and how they're structured, it gives a client to be able to access their bond at any point in time for any purpose. And depending on the type of withdrawal that they make, it can be triggering no tax event for those clients. So for them to know that it is that dedicated vehicle that they can look to contribute to for life events, for education, know that it is an internally taxed product, so no ongoing reporting. They can access it at any point in time. And then when they do use the bond for education, there are tax benefits that they can unlock when they do that. So, from that education point of view, those tax benefits can be quite significant, especially when you're looking at long term strategy.
Yeah, perfect. No, you've summarised that great there. Now, in terms of some of the rules around this, I know you have the kind of you touched on the withdrawal rules and the 125% rule. Are you able to elaborate on the rules around these education bonds with contributions?
Yeah, yeah, of course. So with education bonds, there are three different ways in which a client can look to withdraw and access their funds. So, firstly, you've got your capital access. So, that's client accessing any contributions that they've put into the bond. They can do so at any point in time for any purpose without triggering a tax event. Then they can look to access the bond specifically for an education purpose where they're achieving tax benefits back into the bond. And then lastly, they can do an investment bond withdrawal where you are taking out a component of capital and earnings, and that's where those rules come into play. So firstly, you've got your 125% contribution rule. So just like with super, there are rules in which how much you can contribute into your bond, which will be dictated by what you contributed in the previous year. So as an example, you cannot contribute more than 125% of your previous year's contributions. So if you've invested $1,000 last year, the most that you can contribute this year will be 1,250. The impact to breaking that rule is the impact that it has on your 10-year rule. And your 10-year rule dictates in terms of access to the bond if you were to make an investment bond withdrawal. So that's a component of both capital and earnings. There's going to be a potential tax implication to the client, which starts to ease once you get closer to 10 years. And then if you make a withdrawal post that 10-year period, you can do so tax paid, so without having to pay any additional tax on the withdrawal that you are making. So a lot of the time we see bonds as that long-term strategy where clients are at least holding their bond for a minimum of 10 years, knowing that if things change, they can look to make a redemption post 10 years without incurring any other tax consequences for them.
Yeah, definitely. So am I right in saying that should the not make any contributions one year, that closes off that bond?
Yeah, so it can do. So luckily, because the nature of education bonds are quite flexible, so there are always going to be alternatives to look at if a client is potentially unable to meet that 125 or looking to exceed it. Because with education bonds, you always have that ability to access your capital at any point in time. And with that, it can help with your 125% rule, depending on the scenario that you are looking at. But it's always best to engage someone like yourself or an advisor to kind of talk through what that looks like.
Yeah, definitely. Thank you for that. And in terms of the risks involved,
Mhm.
when people are investing in this, what are some of the risks?
Yeah, so the risks are going to be like any other investment market linked product that you are investing in. So you're always going to have to be mindful of the market risk, and especially with the volatility that we've seen lately, knowing that the investment earnings will go up and down, and that will naturally impact the value of the investment bond. Also, you're looking at things like sequencing risk, being able to access the benefits of the bond at the time when you need it. But there's always going to be different risks associated, even from an organizational level, in terms of who you're investing in and the strength of that company as well. What happens if something were to happen to that company? Luckily, with education bond, there are pretty strict capital requirements involved in that, and with the nature of a structure, there are benefit funds. So if something were to say happen to Futurity, we could step away and another investment bond manager could come in to continue to manage their investment without there being a significant impact to clients. So yeah, there are always going to be risks involved with a market linked product, but it's common to other investment vehicles out there.
Yeah, perfect. And you talk about the underlying investments, so are there multiple companies that they can invest in, or is it just the one
No.
channel?
No. So there are multiple investment options that a client can choose to invest in, whether it is your index funds that you're looking at or your actively managed funds, or if you are looking at sector specific. So a client is always able to build essentially their own portfolio of funds that they want to invest in, or they can choose one for simplicity, but it's really, up to the client and their risk appetite in terms of what they're investing. The appeal of bonds as well is the fact that there is no capital gains tax associated with bonds. So clients are able to switch their different investment options without triggering CGT, because often with bonds, they're also used as that wealth transfer vehicle from grandparent to child or grandparent to parent. And with that, there's potentially going to be different risk profiles for each of the generations. So you may want to look at changing that and know that there's going to be no tax consequence in those circumstances.
Yeah, perfect. So it's kind of got three avenues: education, growing wealth, and that generational wealth transfer avenue there.
Yeah, yeah, 100%. So with our bond, it can definitely be used as that multi-purpose vehicle to look at, various life events. We do say with an education bond, there needs to be that education purpose. But with that, we see it being used as a multiple purpose vehicle for those grandparents using it for themselves, but also knowing that they're going to continue to also fund or help support their kids or grandkids.
Yeah, definitely. And I think that ties into that cost of education. I believe I read on your site that now 11% of grandparents are actually helping their grandkids go through school now.
Yeah, yeah. And then in an additional report, we have the figure that we saw was actually closer to 30%. So more and more we are hearing that grandparents are wanting to support education pathways, whether it is saying, hey, let me take the grandkids back to school shopping, or whether it's, oh, I want to help contribute to the fees, or whatever it may be. We are seeing more and more of that because you're seeing the cost of living pressures really have an impact, say, on the parents, and sometimes we are hearing and seeing that those parents are going through hardship, potentially having to put fees on debt, whether it be a credit card or whatever it may be. But there's also that lean on grandparents as well. And when we went out to these clients and surveyed them, 9 out of 10 of those surveyed viewed education as so significant and so important to the success of the children in the future.
Yeah, definitely. Education is obviously a cornerstone of Australia, knowledge and job recruitment and things like that. So, who ideally suits education bond structure?
Yeah, so um it can be quite open. So it's anyone who is wanting to go down or look to save for an education pathway. Now, it's very natural when you think of education bonds to think of children. And that is definitely the case, and that's definitely what we see. But we also say that education's lifelong. We don't necessarily say it has to fit into this particular box to qualify as education. It is for those who have changes in their career and have to do additional certificates or diplomas, or it's for your adult who maybe wants to learn a language or do an arts course or whatever it may be. So, education is very lifelong. So, it's anyone who is wanting to go down and save for that education pathway. Those also in that high net worth position who are wanting a tax effective structure, those who are considering, wealth transfer to future generations, and those looking for a complementary strategy to super as well, it being an additional option there. So there are a range of different options to look at, but first and foremost, it's those clients who are intending to save and invest for education pathways.
Yeah, perfect. Awesome. That's a great summary of education bonds. So before we finish, we always like to give our guests an opportunity to do a plug. And hopefully by the time this episode releases, we're introducing this as Danny, the winner of the Women's Awards. But in the meantime, did you have anything that you wanted to plug? Give a shout out to your company, anything along
Yeah,
those lines?
yeah, of course. So, I mean, I work for Futurity Investment Group. We have been around for over 50 years supporting education journeys. That has always been a core focus of the company, and especially with our fit for purpose products and supporting those education pathways. With, Futurity in itself, we're continuing to grow and invest in our product, that we hope to continue supporting those education journeys for many years ahead.
Yeah, perfect. Awesome. That's great. Now, anyone, if you have any questions regarding these education bonds, you can reach out to myself or reach out to Futurity. They're both happy to help. Links will be provided at the bottom of the episode. As always, guys, like and subscribe. And thank you for your time, Danny. And I look forward to catching up soon.
Thank you so much.